right, let's just dive into it. Thank you for being here. The crowd, as usual. If you're not here, you're missing out. We have parties. No, we don't. Okay, so as usual, I will start with a little blurb about the indices. I will have a more detailed video about the indices later tonight. This is Sunday, 9:15. Let's go. We have more than 150 tickers to tackle, and they are alphabetical, and they are broken up into 3 different videos. You can scroll through to the tickers you want, so you don't have to watch the whole thing. The S&P, I feel like this week it's all about the NASDAQ, so no need to talk about the S&P and the Dow because they are at all-time highs. The fact the Dow almost made a new all-time high, it did go above the closing high, which was pretty strange because it looked like it was death at one moment because it's so heavy with 1 or 2 stocks. When JP Morgan fell apart, the Dow had a pretty bad spill. So here we are at all-time highs. I think the mystery will lie. So let's pay attention about what I will have to say about this guy and the potential downside from here if we don't break out. The bulls are completely in charge. The market is optimistic about the elections. The Fed has promised the world. The economic conditions have not measured on metrics to be bad, yet we're full steam ahead with the QQE coming almost. So, pretty interesting situation. Let's take it one tick at a time. And we will start with AA. Let's put back the lines. There are some tickers that always make it here, and this to me is like a global growth story. I don't think we have that right now. Technically, this stock is going into a prior fail far away from its highs. Not sure how it's going to take this out. So if I was looking to get long this stock, if it's a tactical long, if you have a reason, go for it. I don't see one. This here looks like it's heading into a pretty bad situation. So it's more likely to dip and establish better footing at 30 in order to tackle this than to just break out of it. But I'll tell you that if it does break out of 35 and change, it might get another $3 out of it maybe. Hard to start longs here for me without specific reasons. So Apple, I would short the rallies in Apple with confidence unless Tim Cook resigns. That would be a catalyst for the stock. This guy, you know my opinion, smart guy, nice guy and everything, but he has completely underwhelmed us with whatever. Even fans of Apple in social media are now nitpicking it. And those are not my words. Those are fans of Apple, like high-profile Apple reviewers are making fun of the lack of wow. The fact that they launched their new phone, their flagship Apple Intelligence phones without the Apple Intelligence part, they did what Microsoft used to do. Promise, put out vaporware. They're saying buy the phone. We promise we're going to send out the AI in hindsight. Really? Anyway, this stock is headed south. If they don't get rid of Tim Cook, the company is headed south. Not by falling behind. It's still an amazing company. By not keeping up with everybody else running 100 miles an hour. Anyway. This company, I would not be long up here. If I wanted to be long Apple, I would be long the SPY. Airbnb is losing probably clients and hosts, probably in the long run. So trading-wise, it's okay to be here. You have pretty good support below 114. You need to hold 108. If you do, then if you don't, then And these weak candles on the left look like opportunities. So they may be. If some by freak accident they break out at 120, they might be able to get $8 out of it. As an investor, I would be leery of the whole concept. There's a lot of junk that need to be cleared out. Let's say we have a real estate problem. What happens to Airbnb? I'm honestly asking from an investment perspective. How long is the weakness in the stock itself will stay if we do have a bad real estate jag? Hi, Peter. So I think that this green M, if it wants to play out, it'll die in the red box. So let's say they do have a bounce. I think there's a lot of limits inside this red box. So I would not be an investor in Airbnb for the next 6 months. If I wanted to be an investor, period, I would engage only partial position and leave room to add more down in the 2 digits if we get there. So be careful. It looks like they lost, and if I put a line here like this, and then again somewhere, it looks like they lost a trend neckline that has much more downside, like here somewhere. But I don't usually trust the trend line because there is a strong bounce. So let's say it drops below 112 again and it loses this one. I think that's the target, the circle down below from a long-term perspective. So be careful. This looks like a target downside area. And if they hold the last week's low, they might recover back up towards 4. If you lose the 3, I think you end up at 220. Adobe just reported, and the stock fell hard on a pretty decent report. The report was record this, record that, and here we are falling. So it's another piece of evidence that what we say is correct. The earnings reaction is almost nothing to do with the actual quality of the report. This report was solid, and they didn't miss anything, but markets expected more. They're throwing a hissy fit. It does have support scattered through 500. I would have sold naked puts if I wanted to own shares. The reason why I didn't sell a naked put trade, because it is a large stock and we would require a lot of margin to sell just one put. We did discuss selling a credit put spread, and that might be available in the next few days, maybe a couple of weeks. We shall see. Rallies into 560, 550, I think will struggle. Range bound, you have sellers above 61.50, you have strong buyers below 58.50. Until that changes, it stays range bound. And there's no earnings until 37 days from now. So you just got to hold 57. If you hold that circle, look at it. Wow, check out how accurate that circle is. That still matters. So don't lose this guy. Be careful. AFRM, I wouldn't touch it up here. If you do want to go ahead, I'd be happy to see it go to 58 without me. This is where it just fell apart. Strangle to buy it? No, it's range bound. If you want to sell it, maybe. If it's range bound, somebody's asking if I wanted to buy a strangle in this one if it's range bound. No, the definition of range bound is the market maker wins. So if you buy a strangle, you're buying it from a market maker, they're going to beat you. If you're going to sell it, fine. It's also not for me. I don't know the stock. Okay, so this one here, I kind of know the stock, and every time it comes up here, it ends in disaster. Hopefully you're asking to see if you should book your profits. Then for me, if you're trading, yes. If you're investing, no. So this looks bullish. If they get to 46, they can get to 54. From a trading perspective, it makes sense if you're trying to trade it. I wouldn't buy it into a prior fail. I would let them dip, buy the next dip, have the guts to buy the dips already. Why do we always chase upside and we're not courageous of buying the downside? So from a trader's perspective, the instinct is to buy here so you can have that opportunity, or let them go and buy it here. So either you buy it at 1 or at 2 to get the cheap calls. Otherwise, you're going to buy the hottest calls into resistance. So either buy the dip or let them break out and then buy that next dip to ride it up. As a trader, as an investor, I won't touch it here. I think we have a borrowing issue coming in the US, if not the world. I think people are spending beyond their needs means, and a rate cut is not going to help. This one is already broken out because of gold. So the thing I don't like about gold stocks is their stock is 100% tied to an asset they do not control. All nice and fine. If you're investing, I wouldn't touch it. If you're trading and you're already long, just scalp. I don't understand the question, to be honest. So come to me in the live and ask me what your question is. You missed it. This looks like a target from the breakout from here. 460. This is, and then some. So you missed the rally. Buy the next dip again. Buy the next dip. AGO. Insurance company. Yep. So this one is range bound. If you can get to 84, you can probably get to 90. But you better hold the support. It's strong. Support anything below 76 is strong. Don't lose 72. If you get to 72, you're going to 64. It's as simple as that. This P&L is pretty crazy. So do your homework. AMD, I would not touch AMD. I would not touch Intel. If what they tell me about NVIDIA is correct, those two stocks are doomed. And they're probably going to die at the hand of Qualcomm. It's a short statement to say that the architecture we've been running in our PCs is not guaranteed to exist down the line. So the company's fine, the leadership's fine. I don't think their business might be fine. So there's a chance that their business is like endangered. So I would rather be long the QQQ than being long this or Intel, for example. Apple, this or Intel, I would not invest for the long term. I don't think they are the same companies they were 6 years ago. With regards to the 10-year outlook, I'm talking like traditional investing. Trading, awesome trading. I gave you the arrows and the arrows have been perfect. Now, going into 158, there should be a lot of sellers. If you can get to 163, you can probably get to the highs. Otherwise, for a trader's perspective, buy the dip into 132 and a half, 133. If you lose 132, you're going to go below 112. Okay. AMGN. Close to a breakout. If it gets to 336, it probably gets to 344, 47, something like that. So these two ticks are still ruling the whole stock. Inside of them, you have support below 322. If you lose 318, you might retest the lows that are close to the low 200s. Those are longer term comments. Shorter term, you can see how this was a target. This is a potential catalyst. So now we're ping-ponging between 336 and buyers below 325. When I say ping-ponging, it means if it goes up to the upper limit, there'll be sellers. If it goes down to the lower limit, there'll be buyers. American Tower. This must be a dividend income. Lose 234, you probably get to 227. Take out 245, you probably get to 250, 251. I would not be long the stock up here. This is a short with a stop. So this red thing on my screen is bearish. And it says we might have another dip towards 216 or 212. And look at the left. Look at all these potential sellers that have been stuck from up here. They are up here. So I believe all of this is resistance. So as long as we are below 252, this red thing says maybe it's easier to get to here first. Amazon, I don't like Amazon up here. There's some things going on in Amazon that I don't like. I can't put my finger on it or explain it, but there are too many first-hand experiences with them that tells me they're struggling internally with execution anyway. So whether they're paying the price or their vendors are paying the price, eventually they will end up suffering. So we have sellers at 195. That's that node. we will have sellers at 198. So the closer you are to 195 or 198, the quicker I would say exit, exit, exit. If I look left, this has been a selling zone. Not my opinion, it's fact. So anything above here did not hold up. So I would say everything above here is resistance from now. These are investment comments. So if I wanted to trade it, I would buy the dip. If I wanted to invest in it, I would hold out. What's wrong with waiting? Nick, I'm in it for the long term. Exactly. If you're in it for the long term, why you don't mind this, but you mind missing out on that? It's not that much. You just sit it out, sell puts to own shares instead, sell credit put spread to create income out of it while you wait. At least buy a debit call spread. Anyway, my point is there's no panic to get into any of these stocks at these levels if you're an investor. This one, on the other hand, you should load all up, everything into it. No, you shouldn't. What the hell? What? Did they announce being acquired by someone? What in the world is happening here? And what is your question more exactly? What is the question here? If you're looking to short it, good luck, but you have my permission if you're just simply buying a put or a put spread to risk a few $100 on it. What in the world? Someone please explain to me. Are you long-term hold from here? You want to buy it here? I would never in my entire life consider it for a second to chase this stock after these 3 days that happened as an investment for the long term. Okay, so you're talking P&L. The comment is, would you hold it up % every day? You say that it's up 5% every day. You're making my point, James. It's up 15% in 3 days at least. Eyeball. What is the trade here? 25% in 3 days. What is the trade? The investment. Where is the rush? Anyway, I have nothing to say about this one except I wouldn't touch it with my enemy's money up here. Look left and ask the people what happened the last time you bought it in such a situation. Ask these people what happened the last time they bought it. So maybe it goes to 140 or it goes to 68. Either way, I missed the 140 entry and I would not want to be on board to 68. So my answer is, if you're asking to short with finite amount of money. If you're asking to go long, not for me. You go ahead and you guys let me know how it works out. ARK, especially if you're an investor. ARK. So it's as good as the top 10 companies that are in it. I don't remember exactly what was in it. I know Apple was in there. No, sorry. Tesla, companies like JD. And so it's like trading the market. If they break out at 46.50, they may get to 49.50. It's tradable from that perspective. I would sell a put spread, I guess, if you twist my arm. Maybe an iron condor. Sell something below 41, something above 49, and see if you can range bound it. This, to me, looks like they lost a neckline up here, this white one, which is just below 48, and they haven't been able to recover it. So there's a good chance they might revisit 42. And if the market's hiccup, this will be at 37 if we have a correction. So, okay, so I don't need to open up to 3 years. I'm just telling you the comments. I don't think it's easy for it to go above 48. It looks like they lost 48 zone, this white line, and they never recovered it. Anything above this white line is a struggle. And that's what they're trying to recover. So it's easier for it to get to 43, in my opinion, than to get to 52 or 51. I know where it came from, but I'm not sure what you're asking me here. So the question is, somebody stuck in it from a higher price. Okay, I know where it's been. I've been trading and maintaining the markets for decades, so I remember how stupid we were in 2021 as a market. So you're asking me, okay, so the stock was a lot higher than here. All right, so that's what the question is. Okay, so to anybody that is long ARK from up in this area and they're still long ARK, you don't need to talk to me. You clearly have a different idea. If you're asking me if it's going to 108, I don't think it's ever going to 108. Never, ever again. This is my opinion, but feel free to do what you want. We had a very unique set of circumstances in 2020 that afforded us to do this silliness. Okay, so there are some stocks that are in it that are dead completely. They're not coming back. The top 10 stocks are good companies. The bottom 90 are not necessarily good companies. So the top 10 stocks are usually about 45 to 50%. Last time I checked. Do your homework. If I bought something up here and it's down here and I'm still long, clearly I don't have any stops. So just sit in it for another 20 years. And that's all I got to say about the actual top. I'm giving you information about the next 6 months that should help people manage their risk for the short term and the midterm. I think it's struggling to recover this white line zone. If you do break out of this recent high here, you might get to 48 or 50. And if I was long, say from 54, I would be out personally. This one is a hold. That's why I sell puts in that every time, every chance I get. I bought shares at the IPO. So this is why Intel and AMD are dying, in case you don't know. These guys sell nothing. They sell ideas, and Qualcomm builds on those ideas. And I think they're going to squash the old school computing. Technically speaking, anything above 160 should be a struggle. Technically speaking, this thing could be at 210 in the next 6 months. I wouldn't buy naked calls in it. I would just buy the next dip. Can we just develop that instinct to buy the next dip? Let me ask you to test yourself at home as well. Were you selling puts and buying dips on 8.5 and 8.7 and September 1st, 2nd, 3rd, 4th, and 5th? If not, then you should write yourself with a big Sharpie somewhere on the desk. When everybody's freaking out, when everybody's freaking out, go shopping. Start lining up awesome companies and see if you want to nibble. Anything you missed on the way up, your instinct would be, instead of calling Nick and saying, hey, is it still okay to buy VIX calls? You should be saying, hey, do you still like the stock? Do you still like that stock? Do you still like this stock? That's the instinct you need to develop. So the next time you see this one falling into 118, nibble. Resistance into and above 165. Reverse stock split. That's hilarious. Asana. Again, this is one, P&L is okay, is messy, but it's okay. And it fell into lows. And if you bought the dip, you made money. If you bought the dip, you're making money. So now we do know that they buy the dip below 1150. So the next time it falls below 1150, buy the dip if you like the stock. Meanwhile, I don't like the trend. Lower highs, lower lows. Eventually, the trend ends, right? So now they have a flash low down to $10. Is this a SPAC? If it is, just buy any approach of 10 as a starter position. Sell puts to own shares. If you don't get assigned, you don't get assigned. I did that with BITO this week. I sold puts. I'm like, please give me shares. Nope. Okay, I'll do it again for next week and next week and next week until I get assigned. So in this case, I might be deploying the same strategy if I wanted to own stock in Asana. If I own stock in Asana for the long term, I don't add here. Space Mobile. Don't know what they do. Interesting name. You can see how they broke out from the zone around 24. And they just tested it for footing a couple of times, 3 times. And now they have the problem here. So this one is stuck between 24-ish and 34-ish. Let's see who wins that battle. AVGO, another one of those stocks that I sold naked puts in. If you talk to me during the correction, the 3-day correction in August, the 3-day correction in September, look at it. So can you put it on your to-do list the next time the market freaks out and this one dips and you want to buy stocks as far? Instead of buying VIX calls on the worst day of the year, sell some puts in or put spreads or buy some calls in some great stocks. Buying calls is not blind. You have to make a plan for it. Okay. 172 is a catalyst to, I don't know, 190, 192. In theory, the catalyst is $30 or more. So over 200. If you take this little poke out, you can get over 200 in a series of higher lows and higher highs. To be honest, I would, if I'm not long, I would buy the dip. Okay, there are some open candles down here. So this open candle got closed. We can fix it on the fly. Okay, so this resistance zone is taken out. We will delete it. Now we have support zones below. So anything below that red line, which is 161-ish, should be support. Next time, have the courage to buy the dip into this yellow box, and you'll be solid. And the way to deploy this should have been resistance. They didn't even respect it. I'll leave it there for visual purposes one more time. Actually, check that. Yeah, I'll leave it there one more time. So the idea is, instead of chasing it up, I can chase it up without money out of pocket. So I would sell a put spread and buy a call spread. Talk to me about timing. We can discuss that. So we knew that Boeing was going to have a big move up or down. We didn't know. We spoke about it live if you're in the live room. I made comments about it in the prior videos. The range is tightening into a pinpoint and something was about to give. Either pop or drop. They opted for a drop. Somebody reached out and they said they sold a 160 put and they're ready to do something with it. If you're stuck in a sold put, just roll it down and out until you get out of it. And don't wait for the last minute. And this one, I think a rally into 167 will be met with heavy selling. So it's not going to be easy to recover that little purple circle up there. So be careful with that. Anything into this candle, for example, that's 165 or higher, should be a struggle. Headlines that will get it there, I'm not sure. Is their management due for a change? Maybe that'll be a catalyst. Go bankrupt. That company? No. Just look at their financials and see if there's any issues with that. So a company goes bankrupt usually is because of financing. Okay, so they burn cash. Cash from operating. So this number is basically saying whatever P&L we delivered, what kind of cash situation did we end up with? This year, the trailing 12-month is pretty bad. Last couple of quarters. So I don't know that they'll break. I mean, the United States would be morons if they would let that happen. Like morons. The leadership here. You should fire whoever lets that happen on their watch. Anyway, during the pandemic, by the way, the government said they will defend Boeing just like they will defend the airlines. So I doubt they will go bankrupt. So it's a good buy to dip opportunity. Markets are at all-time highs, and this one is struggling to hold support. Not the first stock I would run to. I have sold puts in the past, and I've shared. I would do it again, but right now I'm not that inclined. It's doable, though. Baba, I wouldn't touch it. I had a friend of mine who was stuck long in it, and during this dip, and I could hear tears in his voice. I hope he's out of it with this opportunity. I think it's easier for it to get to 78 than it is to 93 or 94. So how are you going to beat this? BIDU, same comment, except that this one did not get the relief, and I believe my buddy was also long BIDU at the same time. Too many Chinese companies, in my opinion. This one is a descending wedge. From a charting perspective, it could have a bounce. If this was, say, NVIDIA, I would say it's going to be in 116 in no time. Like, it's going to bounce through the red line in no time. But I have no idea what this company does anymore. Or how is the environment over there. So do your homework. Technically, this is not an exit. This is a hold or try a long for like 2 or 3 months and see if you can get a swing up. So technically, I see a buy dip opportunity if you know the company to a degree. These were target zones that they got to, and then they became a wall. So look left, and you can see that this area created looks like a sell zone from here. And that was a target on the way down. I said if we lose the neckline, whatever the discussion we were having, I said resistance up here, they overshot, but then they came down to the arrow, to the zone, target zone, and then they overshot to the bottom end. So if I'm long and I get up to the 88.90, I'd be out from a trading perspective. So Biogen is like falling into a critical prior support. Now the concerning part is that they lost this, which looked like solid support. The fact that they lost 198, 200. Let me rephrase. They need to be at 202 or higher to eliminate the risk of losing this massive support from April. If you lose the April support, you will end up in 175, 4. Let's look left. Oh my gosh, yes. You cannot lose April support, because then you would lose all kinds of support. You don't have any near-term support, and then the bears will have their way with it. So sell the rally mode for this one for me. BITO, this represents the price of Bitcoin. This does not mimic owning Bitcoin, nor is it officially tracking the spot price of Bitcoin. So be careful. Be careful here. And 19 to 20 looks like resistance. Okay, the conversation on Boeing continues. The comment is Boeing lost a lot of orders. Okay, forward orders. So Boeing makes money off of deliveries, and Boeing is one of 2 companies that make planes. Even if Boeing shuts down, the other company could not take over all of its business. In other words, sales is not a problem, I don't think. It's them not messing up like they keep messing up. All right. I guess I was long BITO. First of all, I do own crypto, my core position. I'm not trading around that. And I did go long BITO last week on the dip. And I would not chase it here. From an investment perspective, it's not going to matter for the long term. From a trading perspective, you're approaching target 2. So the closer you are to 19, the more likely you're going to face short-term resistance. So figure out your goal with this ticker. It does pay a hefty dividend, but not consistently. So figure out how they decide on the dividend pay. It seems like when the stock is doing well, they do well with the dividend. And it's substantial. It's mind-blowing, but it's not consistent. Don't lose 47, because if you do, you're going to go to 45.50. And what's it going to take to get out of 51? And if you do, you will have some runway. Those are the comments about Bristol Myers. I don't like the P&L at all. Blackstone, I wouldn't touch it. You missed it. Look left. It is breaking out, but if you didn't go long in the 110 area, why are you chasing it in the 152 area? If you are a momentum trader, then and you're on board with this one, I would suggest it's probably better to roll out of this one into, say, JP Morgan, who has had a recent dip, who might have a catch-up trade. I don't know how they make their money, so I'm not really sure about their fundamentals. From a chart perspective, this looks like a breakout, but if you're not on board, you're the last person in. Make sure you know how to trade fast. Citigroup, my lines are working perfectly. They lost 59 and 60, which they needed to hold. So as long as it's below 61, it's in danger of finishing my white squiggly marks again. They have done the white squiggly marks before. Look left. So you want to know that you don't want to end up at 53, because that means you lost this guy, which is the 8.5 dive, the August correction, which means you're going to 50. And if you go to 50, you're in danger of going to 48. You see what I mean? They're selling rallies. Don't let that continue. Okay. Everything I said about BX applies here. What is this? As far as stock price. What is the question? What honestly, if you're in here, please let me know what the question is. If you're asking permission to go long, it's nothing I would chase at these levels, unless you have a specific reason to be long, like a short-term pattern that hasn't played out, but not for me. If you're a momentum trader, go for it for me, or at least buy the dip. The closer to 73, the better. Caterpillar, great company, is going to have a lot of hard time trying to break out of 357. So the easy bounce on CAT you missed. So next time, again, that Sharpie note on the desk, buy the dip when everybody's free. When you get the urge to buy VIX calls and buy puts, please look at companies like this to buy dips. This is an amazing company. If you get above 358, you're probably going to get another $20 out of it. At least challenge the correction from the summer. And look at how you have solid sellers in that zone up there, solid buyers in the zone down here. So you're stuck. And you have buyers at 332. If you lose 325, you might get to 308 again. We won't talk about losing 308. Cracker barrel. So hard for me to say it. Probably every foreigner. Lower highs, lower lows. I used to do finances for restaurants, hundreds of them. I'm not sure why I would pick this one. It's going into earnings in 4 days. I wouldn't touch it. So the reaction to the earnings is all about expectations. Make sure you have yourself protected. Come to me the day of the earnings. Maybe the options are saying something about it. Technically speaking, 41, it's a heavy volume area. That red line I didn't draw, that's the heaviest point of volume, 41. So as you're approaching 41, you're going to find sellers. Maybe it gets to 42 and then dies there. Who's this? Shamur? What is this? Holding company. Performance chemicals. Okay, so 19 should be heavy resistance. If by some miracle you go above 20, maybe you get to 2150 or 22. That's an exit zone. Meanwhile, there is no floor. They keep making lower lows. Oh, there is a floor. So this is your last chance. If you bought the dip into that, good job. You have yourself some profits. You should know that now the hard work starts from here. CCJ. I know somebody who's long CCJ. Technically speaking, I don't like the approach of 43 for a lot of reasons. Looking back to March and April, that yellow line, look how accurate that yellow line was from back there. It was the battle here. It was the failure here, and it will probably present a lot of areas of resistance when we come back into it. So I'm going to leave it back there. Look how pivotal. So let's just say you're stuck between solid sellers above 45 and solid buyers below 38. Do with that what you want. Sell puts to own shares. Sell some short-dated calls against the long-dated calls or shares that you own. That might be the thing to do while it finds a buyer. Charter, that is an exit spot for me. I would not be long Charter into 355. Technically speaking, by the next dip, you do better. The closer to 320, the better. And if you lose the bounce from 315, you end up at 290. Probably pretty quickly. So you do have an opportunity above that lies into this prior fail, but I don't think it's easy. And you do have the opportunity to buy the dip for a reversal to get a chance at doing it after another dip. So 360 is doable, but the zone above here is difficult. You should know that. The easy work is done. Who is this? Cigna. Not an entry point. I think you'll have an entry point at 358. If you go above 370, maybe you get $8 out of it. Crude oil. Crude oil spiked this week. I don't know if we had war headlines or whatever, some BS things. I think we end up at 63.5. So let's do this. Let's copy this from here to here and see what happens. If I look left, there's no recent support. They're in the process of holding this zone. So maybe this is the one time they don't repeat this. So if you're a bull and you're buying this dip here into 68, I get it. It's doable. So what you're looking for is buying this dip to see if it can do that. I'm okay with that. But what's going on is lower lows and lower highs. So this is what's going on, the yellow path I should change that to red so we can. The red path is what's going on. The yellow is the potential. You can see they both have the same dip. It is a heavily manipulated issue, so be careful with that. CLS. I'm not excited about being long. 48 to 50 looks like death. The neckline here that they lost, and they better hold 39. If you lose 39, you're going to 28. Almost guaranteed. I'm not guaranteeing that path, but there's a lot of work to be done to get out of 50, 48 to 50, 52. You have buyers below, sellers above, and the buyers better hold. Comcast. This feels like a target. It could get to 40.3, but for me, I think it's going to chop. It's going to probably come back down to 38.60. Now, I've said it before. This is a bizarre stock. The P&L is kind of boring. And look at how it trades like Tesla. I used to trade Comcast, but I've noticed that every time I do, if you leave it past halfway mark, if you use options and you hold them past halfway of the life of the option, you're going to get stung. So to avoid the bee sting, just trade it actively or invest in it for long term if you believe in it. Are you serious? You're asking for a ticker called CRAK? Somebody released a ticker called CRAK? Or was that a typo? Anyway, I have no comments about such ticker. Look at these dots. So I don't know what this is or what it does. Oil refiners. Yeah, well, I would not invest in anything that's called CRAK. For the spread between the input cost and the oil selling. Yeah, okay. So there's also the name for something else called CRAK. Not for me. So if this is an oil refiner ETF, I would rather invest in a couple of good oil refiner companies. So this one is trying to hold support. If you lose it, you end up at 30, and you have a lot of sellers above 35.5 from volume and from levels. The red line is volume. The 3650 is levels. CRM, that's funny, CRAK. CRM, good company stuck in a range. You can see solid buyers and solid sellers. The higher, the better. Like, what's it going to take out 272? It's going to take a lot of momentum from the market, maybe some news from the company, and a consistent rally. So taking longs going into that zone is kind of risky. This yellow box should be resistance. So the closer you are to 268, the more likely you're at the end of a short-term rally. CROX was a buy the dip moment. It probably still is. So the next time it approaches 125, you can buy the dip and see if you go to 134. This stock moves fast. It trades okay. The quotes are weird. The fills are okay. And it's pretty violent. So if you wanted to own shares on a bad day, it provides a lot of premium. And it's a good P&L. Ugly shoe or not, pretty good P&L. So I get it if you're holding longs or you're looking to buy the dip. CrowdStrike, I would avoid it just because I honestly don't know the legality of. It seems like the world is giving it a pass, and I'm not sure why. One day they tell us it's the worst technological debacle in history, and then we stop talking about it. Our entire world revolves around security on the internet, and these guys get a pass just like that. I don't think it'll be at 320 anytime soon, maybe. So why would I own it? I know there's a lot of money between here and there, but there's a lot of risk too. Cisco, not an obvious entry point. A better entry point would be anywhere below 48, anywhere below 49. The closer you are to 48.50, the better. And you better hold 47.80. Because if you don't, you're probably going to revisit 46. Trading wise. Now, if you take out 51, whatever you want, upside, you can do. Oh, look at that. I changed my mind. What's it going to take this candle out? And this one, and this one, and this one, and this one. So, yeah, this looks like an opportunity, but it's an opportunity to exit, not to chase it up. CVS, it looks like it's a never-ending tornado, whatever you call them, eddy. So, is this a low? I'm asking. If not, then it's 45. 45 would be the 113 of some Fibonacci extension. So, this one, the rally. which is a pretty significant one. I would probably be interested in it there. I don't know why the stock would be doing this when the P&L is not that bad. So they know something you don't, or I don't. So respect it. I think it goes lower. I think it goes to 54, and that would cause it to probably lose 50 eventually. Let's say it this way. It's easier to get to 54.50 than it is to break out of 59 significantly. So weigh your pros and cons. I don't mind the starter position in CVX, although I hate the fact that it's underperforming Exxon. So it's a long, but half of the position. If you're in it for the dividends, you get more money taking a risk-free investment with the government. The only risk-free is bonds. That's what they consider risk-free, and they pay you more than this dividend. So during the pandemic, there was a blind buy for Chevron and Exxon because they were in the $40 territory. And this one is not cheap. And it's as cheap as oil. And its income is tied to oil. And we already looked at CL, and it looks like it could go lower. And this looks like you physically lost a neckline somewhere around 145. So let's put it this way. Technically speaking, if you don't get to 148 or higher, you're probably going to drift lower to 128. Caesar, going into a prior fail, not an opportunity to start longs, although if you're a momentum buyer and you want to buy it here and get rid of it at 41.50, I see it. Big seller, bigger seller. So probably easier to come back down to 37 once it pops here and come back here. So if I was a market maker, maybe I'll do this. Whoops. Let's see if we can make money with that one. I'm flying Delta this week, so we'll see. I don't remember ever flying Delta, at least not in recent history. What's it going to take to break out of 47? I think it's probably impossible. Nice rally off the bottom. Again, if you like the stock up here, you should put it in your to-do list. So when I like a stock and it gets away from me and I'm not on board, instead of looking at it every day and lamenting the day you didn't buy the dip, just put a target where you want to buy it. Okay, set an alert and just walk away. Take it off your watch list. So you're not looking at it every day and getting anxious. Look at this area. This is not a place I would start longs. Look at this zone. I believe that is all resistance. Not one hard line, it's just an area. Who is this? Darling Ingredients. Well, that's a buy the dip moment. It's still unfolding. Lower lows and lower highs, so you know that if I got long here, I'd be getting ready to get out into 139 because they're selling rallies. It's not going to be easy to get 39. 37.50 or higher is going to be a struggle. So on a daily chart, like 2 to 3 months, maybe short term, you're going to struggle. So you're going to need a good, solid thesis and execution. Holding calls is probably not going to cut it. You're going to hold aggressive calls with like an aggressive calendar or something. I don't know what kind of options it has. DDOG. Buy the dip worked several times, but now you also have probably a sell the rip mode into 114. Between here and that red line, there's probably going to be a lot of tempted sellers. Whatever that box is still in play. You're stuck in the middle of the box. Sell puts to own shares. Looks like a solid growing company. And do it with confidence on bad days. Like if you sold puts on the last correction, you probably collected money from somebody who's panicking in the low 80s. I mean, that was a no-brainer for somebody who likes the stock up here. Disney, okay starter position as an investment for a turnaround in the next 6 months to a year and a half maybe. So from that perspective, it's not a trader, it's more of an investment. So I would buy half the shares, and if it falls below 75 or 78, I would add the second half and just sit on it. I mean, it's a good company. They keep jamming themselves into political spats, but it's a good company with good assets. DraftKings, this is an exit, not an entry. I think approaching the yellow box up top is a selling zone, and it's probably easier to get to 35 than it is to 43 or 44. Doximity. So we bought the dip in Doximity and it was hellacious, right? It fell apart. So I remember saying buy shares on the dip, and it may have not have been a perfect entry, or sell puts to own shares. If you were red and this gets you out of trouble, I would be out like a light. If I was stuck from 40 and it got back from 42 and it got back to 40 out of all the trouble I've been in, I would be out. I'll take the $2 loss and move on. It's a good P&L, but they did not respect it. If you're not long already, I would prefer buying the dip into 34 or lower. Okay, and this concludes video 1.